Welcome to our channel Money Minded Online, the podcast where we explore the best strategies, tools, and stories for making money online. Whether you're an aspiring entrepreneur, a seasoned hustler, or just curious about how to thrive in the digital economy, you're in the right place. Each week, we bring you actionable insights, inspiring interviews, and proven tactics to help you build wealth online. So sit back, take notes, and get ready to transform your future. Let's dive in.
All right, so you ready to dive into the world of real estate investing with us?
Sounds good.
Awesome.
Yeah.
We've got this really popular podcast episode here.
Yeah.
And it's got tons of tips on real estate investing, and we're going to break it all down for you.
Okay.
Now, what's really cool about real estate is that it's not like just playing the stock market. You know, it's not just numbers on a screen.
Right.
It's about owning something like tangible.
Yeah.
You know, a piece of property.
Yeah.
You can walk on it. It's something real.
Yeah, you get to see it, you can touch it.
Exactly. And you can there are ways to take advantage of the tax system and even using leverage to build your wealth, ready to unlock those secrets.
Yeah, definitely. What really intrigues me about this podcast is how it goes beyond just the theory.
Right.
It focuses on real life strategies that people have used to actually achieve financial freedom through property. So we're going to get into all those specifics, but also help you see how those tactics fit into the bigger picture of wealth building and financial freedom.
Cool. So let's start with why real estate is such a popular investment in the first place.
Okay.
The podcast lays out 4 big advantages, and I'm personally drawn to this idea of cash flow.
Okay.
So imagine this. You buy a property, you rent it out, and all of a sudden you have this extra income stream coming in every month. They had this example. Imagine a $200,000 property bringing in $2,000 a month.
Yeah, that's the classic, what they call the 1% rule example. But, we have to remember it's a simplification.
Right.
In reality, achieving that kind of return really depends on a whole lot of factors, like location, your expenses, all that stuff.
Okay.
So it's a good starting point.
Right.
But always dig deeper into those numbers.
Okay, good point. So beyond cash flow, you also have the potential for your property to increase in value over time. That's what they call appreciation, right?
Exactly.
It's like getting a bonus just for owning the property.
Yeah, and that appreciation builds equity, which is kind of like hidden wealth that you can tap into later. Think of it as a growing asset that you control.
Okay, so this is where it gets kind of clever. Tax advantages. So the podcast mentioned how real estate investors can actually deduct things like mortgage interest, property taxes, even depreciation.
Yeah.
Feels almost like a secret loophole or something.
It's not really a loophole, but it's a smart way to legally reduce your tax burden.
Okay.
Depreciation, for example, lets you deduct a portion of the property's value each year to account for wear and tear, even if it's actually going up in value.
Oh, interesting. Okay.
Yeah.
And then there's this whole thing called leverage. It's like a superpower in the real estate world.
It is.
It's basically like you're using borrowed money to control this much larger asset.
Think of it like a business taking out a loan to expand.
Right,
That borrowed money helps them acquire more assets and potentially achieve higher returns. But of course, leverage comes with risks too. It can magnify losses if things don't go as planned.
So it's always a balance.
Always a balance.
Okay, so let's get into the different types of real estate you can actually invest in.
Okay.
The podcast talked about 5 main categories.
Right.
So first up, we have residential properties.
Yeah.
You know, like your single-family homes or duplexes, places where people actually live.
Yeah, these are often the starting point for a lot of new investors because they're familiar, relatively easy to manage.
Yeah.
You know, you're usually dealing with individual tenants.
Right.
The financing process is pretty well established.
Okay.
So it's a good place to kind of get your feet wet.
Cool. All right, then there's commercial real estate. So that's like your office buildings, shops, warehouses.
Right.
I feel like this is where you become the landlord you see in the movies.
Yeah, well, commercial properties can be very profitable.
Yeah.
But they come with their own unique challenges too. You might be dealing with businesses as tenants.
Okay.
Which means more complex lease agreements.
Right.
Potentially higher stakes as well.
Okay, so maybe not for the the brand new investor.
Right.
Yeah.
Might want to get some experience under your belt first.
Okay. Now, they also mentioned vacation rentals.
Yeah, vacation rental.
So think Airbnb. You own that beach house, and it generates income when you're not even using it.
Yeah, they can be lucrative, but they're also a lot more hands-on.
Oh, okay.
Yeah, you're dealing with that constant flow of short-term renters, seasonality, local regulations.
Right.
All that plays a big role.
Gotcha. Okay, so for those who want to invest in real estate, but without actually owning a property, there are REITs, or real estate investment trusts.
Yeah.
That sounds like a way to kind of dip your toes in without, diving head first.
Yeah. So REITs are basically companies that own and operate income-producing real estate.
Okay.
So when you invest in a REIT, you're actually buying shares of that company, similar to how you would buy stocks.
Oh, interesting. Okay.
So it's a way to participate in the market without the responsibilities of being a landlord.
Cool. Okay. And then there's land, raw, undeveloped land. This feels like the ultimate long-term play.
Yeah, it does. It's almost like betting on the future, isn't it?
Yeah, a little bit.
You have to have a lot of patience.
Okay.
Do your research. It can be tough to sell quickly. You really need a vision for what that land could become someday.
Right.
But if you choose wisely, the returns can be significant.
So we've talked about why real estate is attractive, the different types of investments. Now let's talk about the golden rule. Location, location, location.
Couldn't agree more. I mean, the podcast emphasized this over and over again.
Yeah.
Location really does determine everything. Your rental income, how fast the property appreciates, even the type of tenants you're going to attract.
Wow, it has that big of an impact.
It really does, yeah.
So they recommended looking for areas with a strong job market.
Makes sense, right?
Yeah. I mean, I guess. Because people need jobs to afford rent. It seems logical, but I never thought about it that way.
Yeah, a thriving job market, it's a good indicator of economic stability.
Okay.
Which is attractive to both renters and buyers. Also, good schools.
Oh, yeah?
That's a major draw for families.
Of course, yeah.
And of course, safety is a huge one.
Yeah.
Low crime rates are essential.
Yeah, absolutely. So how does that impact property values?
Well, think about it. Would you want to live somewhere that didn't feel safe?
Right. No.
Of course not. And neither would anyone else. So that demand for safer areas drives up prices.
Makes sense. Okay, the podcast also mentioned amenities, things like parks, shops, restaurants, good transportation.
Yeah, all that adds to a location's appeal.
Right.
Makes it a more desirable place to live.
Yeah. They even suggested looking for areas with upcoming developments.
Okay.
So like a new highway or a shopping center. It could potentially boost property values in that surrounding area.
Yeah. It's like trying to predict the future of a neighborhood.
Right, exactly.
And that's where understanding the broader economic trends and demographic shifts becomes really crucial. It's not just about what's happening right now.
Okay.
It's about what's likely to happen in the future.
So we found our perfect location.
Right.
Now, the big question is, how do we actually finance this investment?
Right. How do we pay for it all?
The podcast actually outlined quite a few options.
Okay.
Let's start with the most traditional one, mortgages.
Yeah, mortgages.
So mortgages are loans specifically designed for buying property. And they typically require a down payment.
Right.
For investment properties, that down payment is usually higher.
Yeah.
Than for a primary residence.
Because lenders see it as a riskier investment.
Right. Okay. But there are other ways to get in the game. They mentioned FHA loans.
Yeah.
And these require a smaller down payment, something like 3.5%.
Right.
And they're geared towards first-time buyers.
Yeah, FHA loans are great for making home ownership more accessible, but they do come with some restrictions.
Okay, like what?
It's like limits on the property type, loan amount.
Okay.
It's always a trade-off.
And then there's this really, clever strategy called house hacking.
House hacking.
You buy a multifamily property, you live in one unit yourself, and you rent out the others. And those rents help cover your mortgage.
It's like having your tenants pay your living expenses.
It is. That's a pretty good deal. Okay. They also mentioned hard money loans.
Yeah.
Which seem to be more geared towards experienced investors.
More experienced.
Who are looking to flip properties quickly.
Exactly. Yeah. So hard money loans, they're short-term loans.
Okay.
And they come from private lenders, not banks. They usually have higher interest rates than traditional mortgages.
Okay.
But they're often used for renovations.
Right.
Or to bridge the gap between buying and selling a property quickly.
Okay. And then there's the option of, partnering up with other investors to pool resources.
Yeah.
Share the profits.
Partnerships can be a great way to diversify your portfolio. Share the risks.
Okay.
But choosing the right partners and having a really clear legal agreement in place, that's crucial.
Okay, so they even mentioned seller finance.
Seller finance.
Where the seller of the property actually helps finance the purchase.
Yeah.
Now, I'm guessing that requires, some negotiation skills.
It does. It does.
Yeah.
But seller financing can be a win-win for both sides, especially if you have good credit.
Yeah.
And the seller's motivated.
Okay.
It often involves a lot more flexibility in the terms of the deal.
Okay, cool. So before jumping into any of these financing options, the podcast really stressed the importance of crunching the numbers.
Yes.
And making sure that the property is going to cash flow.
Right.
Meaning the rent covers all your expenses.
Absolutely. That due diligence is critical.
Okay.
I mean, you really need to analyze that potential rental income.
Okay.
The operating expenses, debt service, to determine if that property will actually be profitable.
Okay.
Don't rely on gut feelings. Let the numbers guide you.
All right. Financing sorted. Now, what about managing the property?
Yeah.
Do we go the DIY route or do we hire a professional?
That's a big decision. And the podcast offered some good advice on that.
Okay.
So managing a property yourself can definitely save you money.
Yeah.
But it requires a lot of time and expertise, especially if you've got multiple properties or you don't live nearby.
Right, that makes sense. Now, they mentioned property management companies.
Yeah.
They typically charge a percentage of the rent.
Right.
Somewhere between 8 and 12%.
Yeah.
But they handle everything.
They do. From finding tenants
okay.
to collecting that rent, dealing with all those maintenance issues.
So if you're short on time, or just prefer a more hands-off approach, professional property management can be worth it.
It can be.
But it does cut into your profits.
It does. So it's a trade-off. You have to weigh those pros and cons.
Yeah, for sure. Now, if we decide to be our own property managers, podcast, they said we got to be up to speed on landlord-tenant laws.
Oh, yeah.
Which vary by location.
Absolutely. And they cover everything from, leases to evictions. It's important stuff.
Okay.
Being aware of those legal obligations as a landlord is absolutely crucial.
Speaking of tenants.
Yes.
They really, really emphasized the importance of tenant screening.
Oh, yeah.
I can imagine a bad tenant could be a total nightmare.
They can be.
Right.
Thorough tenant screening is one of the most important steps in protecting your investment. You always want to check those credit scores, verify income, and contact previous landlords for those references.
Okay.
You want to get the full picture.
So we've laid a really solid foundation here.
I think so.
Now let's get into some of those advanced strategies for really scaling a real estate portfolio. Now, we touched on the BRRR method earlier. Buy, rehab, rent, refinance, repeat.
BRRR.
It sounds like a recipe for rapid growth.
That can be.
Yeah. But are there any potential pitfalls?
Well, like anything in real estate, it's not without its challenges. The rehab phase, that can get a little tricky.
Okay.
Accurately estimating renovation costs.
Right.
Finding reliable contractors, those are absolutely essential.
Okay.
Because a poorly executed renovation can lead to delays, cost overruns, and trouble attracting good tenants.
So construction knowledge or like a really reliable contractor is pretty key.
Absolutely, yeah. Having that expertise on your team can make all the difference.
And the refinance phase, that also requires careful planning. Right?
It does. Yeah, you need to have built up enough equity through the renovation to qualify for a new loan that covers that initial investment and lets you pull out cash for your next purchase.
Oh, okay. So timing the market seems pretty crucial with this method.
It is.
You got to buy low, renovate strategically, find those good tenants, and then refinance when the time is right.
Exactly. Yeah. The BRRR method works best in those markets where property values are appreciating steadily.
Okay.
Allows you to build up equity quickly.
Now let's try to unravel this 1031 exchange. This one sounded a little bit more complex. Can you break it down for us?
Sure. So a 1031 exchange, it's also known as a like-kind exchange.
Okay.
It lets you defer capital gains taxes when you sell an investment property and reinvest the proceeds into a similar one.
So instead of paying taxes on that profit, you just roll that money into a new investment and keep growing your portfolio.
Exactly. It's a very powerful way to preserve capital.
Wow.
Accelerate wealth building. But there are some very specific rules and timelines that you absolutely have to follow. For instance, you have 45 days from the sale of your property to identify potential replacements.
Okay.
And 180 days to close on one of them.
Oh, wow. Okay.
And during that time, you can't touch the money directly.
Right.
It has to be held by what's called a qualified intermediary.
Definitely sounds like something you need expert guidance on.
You do. Working with a qualified intermediary, like a real estate attorney or a 1031 exchange specialist.
Right.
That's crucial. You want to make sure you're following all the IRS rules.
Yeah, absolutely. Okay, that's BRRRR and 1031 exchanges. Any other advanced strategies?
You know, one of the simplest yet most overlooked strategies they mentioned was networking.
Networking?
Yeah, joining real estate meetups, online forums, investment clubs. It's about connecting with other investors and learning from their experience.
Yeah, it's about tapping into that collective wisdom, right?
Exactly. Yeah. Networking can help you learn from seasoned investors. Get insider tips on local markets.
Right.
Maybe even find off-market deals that never get publicly listed. I mean, real estate is a people business. Those connections, they can be invaluable.
Yeah, for sure. Now, before we wrap up this part of the deep dive, I want to go back to those inspiring success stories that the podcast shared. They really bring home the idea that this is actually achievable. What key takeaways stood out to you from those stories?
You know, the success stories really emphasize the importance of starting small.
Okay.
And scaling gradually. Remember that investor who started with just a duplex? Yeah, and used house hacking to build equity, generate cash flow. Yeah, that allowed them to eventually acquire more properties.
It's a reminder that you don't need a fortune to get started.
No, you don't. You can start with what you have and build from there.
Okay. And then the couple who flipped houses.
Yeah, they demonstrated the power of reinvesting profits. By putting those earnings back into the business, they basically created this snowball effect that accelerated their growth.
It's like the saying, it takes money to make money.
It does.
But with a strategic approach.
Exactly. And both stories really highlighted the importance of persistence and a long-term mindset.
Right.
Real estate investing, it's not a get-rich-quick scheme.
Okay.
It takes patience, dedication, a willingness to navigate challenges.
It's a marathon.
It is a marathon, not a sprint.
Not a sprint. But with the right mindset, the rewards can be life-changing.
Absolutely.
Yeah.
I mean, financial freedom, passive income, the satisfaction of building something tangible and valuable.
Yeah, absolutely. So those stories aren't just anecdotes. They really represent the potential that exists in real estate investing.
They do.
And with the right knowledge, the right strategy, the right mindset, anyone can achieve those results.
They can.
Okay, we've covered a lot of ground, but I kind of want to take things a step further.
Okay.
We've talked about these traditional real estate investments, you know, residential, commercial properties.
Yeah.
But with all these changes happening in the world, like the rise of remote work, what do you think the next real estate hotspots might be?
That's a great question. I mean, the world is changing so rapidly.
It is.
And those changes are absolutely going to reshape the real estate market.
So we've seen, you know, a surge in vacation rentals because of platforms like Airbnb.
Yeah.
Are there any other like emerging trends that are creating these new opportunities for investors?
Well, what's fascinating is how demographics and lifestyle preferences are changing the landscape. So for instance, we're seeing a trend towards smaller, more sustainable homes, especially in an urban area.
Yeah, like micro apartments, co-living spaces.
Yeah, exactly.
They're becoming really popular, especially among, younger generations.
Yeah, and with more people embracing remote work, location independence is a key factor. We might see increased demand for properties.
Okay.
In areas offering a high quality of life, natural beauty, strong sense of community, even if they're not traditional economic hubs.
So think like mountain towns, coastal communities, even rural areas, as long as there's reliable internet.
Yeah, exactly. And then let's not forget about the aging population. As baby boomers retire, we might see a greater need for senior living communities, assisted living facilities, properties catering to that older demographic.
Right. So it's not just about finding like the next trendy neighborhood.
Right.
It's about understanding those broader societal trends.
It is, yeah.
And anticipating how they're going to shape the future of housing.
Absolutely. I mean, the most successful real estate investors are the ones who can adapt to changing market conditions, identify those emerging opportunities, and make strategic decisions based on sound analysis and a bit of foresight.
I have one last thought-provoking question for you and for our listener.
All right, let's hear it.
Okay, so we talked about, various types of real estate investments, residential, commercial, vacation rentals, even land.
Yeah.
How might these trends we've been talking about impact the performance of each asset class? Okay. Could we see some types of real estate become more or less desirable in the coming years?
That is the million-dollar question, isn't it?
It is, yeah.
Predicting the future of real estate is never easy.
Right.
But by understanding these trends, at least you can start making more informed investment decisions.
Yeah, it's like we're piecing together this puzzle, looking for those clues that reveal the bigger picture.
I like that analogy. Yeah, it really is predicting those future weather patterns of real estate.
Yeah, exactly.
It's tough. But if we understand the trends, we can at least make better decisions. Yeah. More informed decisions.
Right, exactly. Yeah. It's like we're these detectives, searching for clues to reveal the bigger picture. Okay, so before we get too lost in the future, let's go back to tenant screening for a second.
All right.
The podcast, they really hammered home.
Yes, they did.
How crucial this step is to protecting your investment.
Absolutely. They made a great point about checking those credit scores as like a starting point. Gives you a glimpse into their financial responsibility.
Yeah.
Low score could signal a history of late payments.
Right.
Or, even financial difficulties. So that's definitely a red flag.
Makes sense. They also recommended verifying income, right?
Yeah, absolutely.
So like to make sure the tenant can actually afford the rent.
Yeah, you want to go beyond just taking their word for it.
Right.
Asking for pay stubs, tax returns, bank statements, all of that helps confirm that they have the means to actually meet their obligations. And never underestimate the value of contacting previous landlords.
Oh yeah, references. References are it's like getting the inside scoop.
Exactly.
So what should our listener be asking those previous landlords?
You want to know the whole story. Did they pay rent on time?
Okay.
Were they respectful of the property?
Right.
Did they follow the terms of the lease? Were there any noise complaints? Other issues? Those firsthand accounts can really reveal a lot about how reliable that tenant's going to be.
So it's like conducting a background check for your potential tenant.
Exactly. You want to make sure you're getting someone who's going to take care of your property.
Right. Okay. That makes sense. So let's shift gears back to those advanced strategies for scaling a real estate portfolio.
All right.
We talked about the BRRR method before. Buy, rehab, rent, refinance, repeat.
BRRRRR. Yeah.
So for our listener who's thinking about, trying this approach, what are some key things they should keep in mind?
Well, the BRR method, it's all about adding value and maximizing those returns. Yeah. But it really hinges on a few critical factors. The rehab phase, that's where things can get a little dicey.
Okay, why?
You really need to accurately estimate those renovation costs.
Okay.
Find those reliable contractors.
Yeah.
I mean, that's absolutely essential.
So you need to have some construction knowledge.
It definitely helps, yeah. Or partner with someone you trust.
Okay.
Because a botched renovation, that can just lead to budget blowouts, delays, trouble attracting good tenants.
So you're saying a bad contractor can really mess things up?
They can. And then the refinance phase, that requires some planning too.
Okay.
So you need to make sure you've built enough equity through the rehab to actually qualify for a new loan that covers your initial investment and lets you pull out that cash for your next purchase.
So it sounds like timing the market is pretty crucial with this method.
Yeah, you got to buy it right.
Okay.
Renovate strategically, secure those good tenants, refinance when those conditions are favorable. All those pieces have to come together.
So this BRRRR method, it really shines in those markets where property values are appreciating.
Exactly. Yeah, that allows you to build up that equity quickly.
Right, and you can keep rolling it.
Exactly.
Okay, let's demystify this 1031 exchange a little bit.
All right.
So it's a powerful tool, right?
It is.
But I think it's often misunderstood.
Yeah, a lot of people, they hear about it and they think it's some kind of magic trick to completely avoid paying taxes.
Right, so it sounded like a way to avoid those capital gains taxes, which definitely piqued my interest. So can you walk us through the details?
Sure. So with a 1031 exchange, you can defer those capital gains taxes when you sell an investment property, as long as you reinvest those proceeds into a similar property.
So you're basically freeing up capital without taking the tax hit.
Exactly.
So you can reinvest it.
Yeah.
And you can potentially scale up to a larger property.
Yeah, maybe one that's in a better location.
Yeah.
Or one that generates more income.
Yeah, so instead of giving like a chunk of that profit to the IRS, you can keep that money working for you.
Exactly. Keep that momentum going.
Yeah, okay. So I can see why this is appealing to more experienced investors.
It is, yeah. But there are some pretty strict rules and timelines involved.
Okay.
It's not just as simple as, selling one property and buying another whenever you feel like it.
So what are some of those key rules that our listener needs to be aware of?
Okay, so here's the main thing. You've got 45 days from the sale of your property to identify potential replacements.
Oh, wow. Only 45 days.
45 days.
Okay.
And then you have to close on one of those identified properties within 180 days.
Oh, wow. Okay.
And during that whole process, you can't touch the money from the sale directly.
Okay.
It has to be held by what's called a qualified intermediary.
So definitely sounds like you need a professional to guide you through that.
Oh, absolutely. Absolutely. Working with that qualified intermediary, someone like a real estate attorney or a 1031 exchange specialist, that's crucial. You have to make sure you're dotting your I's, crossing your T's, complying with all the IRS regulations, because a misstep could cost you.
Right. In terms of taxes.
Yeah, big time. Yeah, in terms of taxes and penalties.
Okay, so we got BRRRR 1031 exchanges. Were there any other like advanced strategies they talked about?
One of the simplest but often overlooked strategies they mentioned was networking.
Okay.
Yeah, just the power of networking. Joining real estate meetups.
Right.
Online forums, investment clubs, all that can really open up a world of opportunities.
Okay.
It's about tapping into that collective wisdom.
Yeah.
Building those relationships.
So it's valuable in any field, really.
It really is. It really is. So networking can give you access to those seasoned investors who can share their knowledge, tips on the local markets, maybe even some potential deals that never hit the public listings. Real estate, it often comes down to who you know. Building those relationships that can give you a real edge.
It's like having that secret network.
It is. It's like having that inner circle
of advisors and collaborators.
Exactly. Yes. People who've been there, done that, can help you avoid those costly mistakes.
Okay, so before we wrap up this part of the deep dive, I want to revisit those inspiring success stories.
Yeah, those were great.
From the podcast, because they highlighted how attainable this can be.
They did. Yeah. And, they were a great reminder that you don't need a ton of money or years of experience to get started. Yeah. Remember that investor who started with just a duplex using house hacking to kind of get that foothold?
Yeah.
It shows you that you can start small and gradually build from there.
So you can start with what you have.
Exactly. And the couple who flipped houses,
they highlighted the power of reinvesting profits, putting those earnings back into their business.
Okay.
They accelerated their growth, reached financial independence much faster.
Yeah, it's a good reminder that building wealth, it takes discipline. It's about the long game.
It is. It's not about spending every dollar you earn. It's about reinvesting it strategically.
Right. So you create that snowball effect.
Exactly.
And both of those stories really underscored the importance of persistence, that long-term mindset.
Absolutely. Real estate, it's not a get-rich-quick scheme.
Right.
It requires patience, dedication, willingness to weather those challenges.
It's a marathon.
It is a marathon. It's not a sprint.
Not a sprint.
And like any marathon, it takes training, preparation, the right mindset to cross that finish line.
Okay, so those stories weren't just feel-good anecdotes, right? They really represented the potential. Yeah, I think they did a good job of that.
Yeah, that exists in real estate investing.
Yeah, they were very inspiring.
And they showed that with the right knowledge, the right strategy, and a healthy dose of perseverance, anyone can achieve those results.
They can.
Okay, we've covered a lot in this deep dive.
We have.
From why real estate is a powerful investment vehicle to exploring those different property types, financing options, even those advanced strategies for scaling your portfolio.
It's been a great discussion.
We even took a peek into the future a little bit.
We did.
Considering how those emerging trends might reshape the market.
Tried to get our crystal ball out.
So we've equipped our listener with, some pretty valuable insights.
I think so, yeah. Hope so.
From this podcast episode.
Yeah, I think we've given them, a good roadmap.
Yeah, absolutely. Absolutely. So now it's time to activate their inner real estate visionary.
Absolutely. Got to put all this knowledge to work.
Okay, so we've talked about those traditional real estate investments, right? Residential, commercial properties. But the world's changing so fast.
It is.
Where do you think the next real estate hotspots might pop up?
That's a tough one. That's the question that keeps every real estate investor up at night.
Yeah, because the world is in constant flux.
Yeah, and those changes, they're going to create new opportunities in the real estate market.
Yeah, we've already seen the rise of vacation rentals thanks to platforms like Airbnb. Are there other trends on the horizon that could lead to new investment possibilities?
Well, what's fascinating to me is how those demographic shifts and evolving lifestyle preferences are reshaping what people want in a property. So, for example, we're seeing a growing preference for smaller, more sustainable homes.
Right.
Especially in those densely populated areas.
Yeah, like micro apartments, co-living spaces.
Yeah, exactly.
They're going to be really gaining traction.
They are.
Especially with those younger generations, who prioritize flexibility and affordability.
Yeah, and with the rise of remote work, location independence has become huge.
Yes.
So we might see increased demand for properties in those areas that offer, a high quality of life, access to nature, strong sense of community, even if they're not those traditional economic hubs.
So mountain towns.
Yeah, think about those mountain towns.
Coastal communities, even rural areas.
If they have that reliable internet.
As long as they have the internet.
Exactly. And then we got to think about the aging population too.
Oh, yeah.
As those baby boomers retire, there's going to be a growing need for senior living communities, assisted living facilities, properties that cater to that older demographic.
So it's not just about chasing after the next trendy neighborhood, right?
Right.
It's about understanding these bigger shifts in society and anticipating how they're going to impact the housing market in the long term.
Yeah, it's about looking beyond the hype.
Right.
Seeing those underlying forces at play.
Yeah. So the most successful investors are the ones who can adapt to those changing market conditions.
Absolutely.
They can identify the emerging opportunities, and they can make strategic decisions based on good analysis and a little bit of foresight.
They're always thinking ahead. They're playing that long game.
Yeah, exactly. Now, here's a thought-provoking question for our listener to kind of ponder.
All right, I like it.
We've talked about these various real estate investments, right? Residential, commercial, vacation rentals, even land.
Right. We've covered a lot of ground.
How might these trends that we've been discussing impact each asset class?
Okay.
Could we see certain types of real estate become more or less desirable in the years to come?
Yeah, that's the big question, right? Like trying to predict the future of real estate. No one has a crystal ball. But understanding these trends can help us make smarter choices.
Right. It's like we're looking for those subtle clues, those hints about where the market's headed next.
Exactly. Okay, so as we wrap up this deep dive, I want to make sure our listeners walking away with actionable stuff, things they can actually use.
Yeah.
Right? So we've covered a lot of ground, from like the basics of real estate investing to those more advanced strategies for building a portfolio.
We went from beginner to advanced.
Yeah, we did. We explored the different types of properties out there, the whole financing thing, the super important role of location.
Location.
And we even talked about, those emerging trends that could completely change the game in the next few years.
Totally. And then we talked about, really doing your research.
Oh, absolutely. Due diligence is key.
Due diligence, connecting with other investors to learn.
Yeah, get that mentorship. Right?
Yeah, exactly. Learn from their experience and maybe their mistakes.
Definitely. Learn from those who've already been down that road.
So I think maybe the most important thing we talked about was that long-term mindset.
Absolutely. Real estate it's not a get-rich-quick scheme. It's a marathon, requires patience, persistence, willingness to, roll with the punches. The market's going to go up. The market's going to go down.
It's going to fluctuate.
You got to be ready for it.
It's like we've given our listener, like a toolkit, a toolbox.
Yeah, a roadmap.
Yeah, to navigate this world.
Yeah, it's an exciting world to be a part of.
It is, and now it's up to them. They gotta take that knowledge and apply it to their own situation.
Exactly, and find what works best for them.
And start building their own path to success.
Their own real estate empire. Maybe start with a small property, a rental, then expand to a bigger one.
Right.
Maybe even start flipping houses. The possibilities are endless.
Yeah. And remember, it's a continuous learning process.
It really is. The learning never stops in real estate.
So stay curious, stay informed, never be afraid to ask questions.
Exactly. There's so many resources out there. Books, podcasts, online communities.
So surround yourself with like a network of support.
Yeah, find your tribe.
Learn from others. And most importantly, never stop exploring.
The world of real estate. It's dynamic. It's ever-changing. That's what makes it so exciting.
That's what makes it fun. Well, thanks for joining us on this deep dive into the world of real estate investing.
Yeah, this was great. Thanks for having me.
And we're excited to see what you accomplish.
Thanks for tuning into our channel Money Minded Online. If you found value in today's episode, don't forget to hit the like button, subscribe, and turn on notifications so you never miss an update. Share this episode with friends who are looking to make money online and join the community. Drop a comment below with your favorite tip or takeaway. We'd love to hear from you. Until next time, keep hustling and making moves. See you in the next episode.